Kamlesh Gandhi, Chairman and Managing Director of Mars Infra Financial, joins us now. Walk us through as to what is happening in the business which you represent, considering that we've almost got a mini profit warning from some of your peers in terms of what is happening to the bottom of the pyramid, the microfinance and perhaps unsecured exposure.
Good morning. So as far as we are concerned, we are so-called a diversified financing company, whereby we work in MEL, SME, two-wheeler, commercial vehicle, and we are also into housing finance. So as we have witnessed that in the micro enterprise loans, because of the aggressive lending, the asset quality has suffered. And as far as we are concerned, we are quite cautious. We were cautious in Q1, we were cautious in Q2, reflective from the fact that our NPS have been well under the controller as well, targeted anywhere between 2.25 to 2.5%, and NNP at around between 1.25 to 1.5%. And we have been dealing in this segment since long. We have seen various and navigated various cycles. So extending credit where it is due has been the dictum, which has helped us to remain in good state.
Right, interesting. So help us understand what really is happening when it comes to micro enterprises and that particular loan segment, because there's a lot of chatter on ground. That your company as well is witnessing some amount of stress in this segment. What exactly is the picture?
So as I shared earlier that this segment was, the lending was done very aggressively to this segment. And the basic fundamentals were overlooked at some of the places. And that is where we are seeing the stress. Nonetheless, this segment has shown a lot of resilience in the past, be it demonetization, be it COVID. But this time around, it is not because of such factors, but it is because of the internal operational factors of the finance companies. That is where people need to be very cautious in terms of lending. And the concept of chasing growth at any cost really doesn't work in lending. And that is what at Mars we always do, that we extend credit where it is due. Over all these years have grown at a calibrated pace of anywhere between 20 to 25%. So navigating through cycles while lending to this enterprise is the only panacea, is to extend credit where it is due and to be patient in your growth.
So you've guided already for a gross net NPA range of 2.25% to 2.5%. And looking at the trend, it seems either the company will be on the upper end or manage to breach it as well. Would you like to revise this guidance?
No, I think we'll be well within those guidance. Anywhere between 2.25 to 2.5% is what we see right now. And we'll be in a position to maintain the GNPS as I see it right now, between 2.25 to 2.5%.
Right. Morning. Now, the ticket size of the micro enterprise loans has declined to about 54,000 versus 70,000 earlier. And also, of the total AUM, microfinance is now less than 5%. Can you walk us through what's happening in both of these segments? Has the company tightened credit parameters?
So that is a continuous process, as a very dynamic process in lending. So whenever we see overall stress, we extend credit very cautiously. And hence the credit parameters are tightened, which results into lower ticket size of loans. And going forward, and by going forward, we have been doing this since long, and it depends upon the overall leverage of the borrower and the ticket size will depend upon what the borrower can repay. And while taking this into account, the loans are given. That is what has resulted into lower ticket sizes.
What about your SME portfolio? Because the rejection rates have gone up. Have you been seeing any over-leveraging in this segment, and also in this situation in any of the other segments as well? What are you doing to overcome this?
See, as far as MSME, that is micro enterprise or smaller medium enterprise loans are concerned, there has been a lot of borrowing opportunities for the borrowers because there have been so many lenders in this segment. So over leverage is the ultimate result when there are a lot of borrowers. So every company has to design their credit policies in such a manner that the asset quality is maintained. So if you see in our SME business also, we have maintained the asset quality. We have that contributes close to around 30-35% of our business. And right now we have been very cautious since last 2 quarters. That caution will continue. And this, as a lender, we have to be always cautious because we work horizontally across segments and across geographies. So we see headwinds here or there. So once again, I will reiterate that the dictum of extending credit where it is due augurs well for the lending institutions.
In the entire unsecured category and MFI category, whatever write-offs the industry is having, whatever you're having, can they make a comeback? Is there provisioning? Is there a possibility that whatever write-offs everyone has taken, they could actually come back in the second half of this year or the Q4?
It won't come back that quickly. It will take time, because these are the borrowers. Once they slip into NPAs, for us to recover money from them is not that easy. So once they slip into NPA, it takes much more time, and majority of the money over a period of time, say over 12 months or 24 or 4 months, might be recovered. It depends upon the operational efficiencies of the company, but it is a time-consuming process.
In general, the view from Reserve Bank of India is that NBFCs, they now need to slow down. They are taking a lot of capital from banks, and they are growing at a rate which is higher than the industry average, and NIMs which are not going to sustain. What do you have to say to that?
So that is the move in the right direction. Every NBFC has to have a model which is sustainable, and that is where the higher NIMs means higher lending rates, and higher lending rates is higher risk. So you need to balance all those things. So automatically, when you are cautious in lending, the growth rate will also taper, and so will your NIMs taper. So ultimately, the aim is to create quality assets and just not go on lending according to the demand of the borrowers. And I think that is the right advice that has been given by RBI.
Where do you see then credit growth settling? And what would be your multiplier to the credit growth? One has to use that as a benchmark.
I think if you say, and if you presume India growing at between 6 to 7%, the requirement of credit anywhere between will be upwards of 20%, and which banks alone cannot fulfill. So there is a lot of scope for the NBFCs to grow. But while growing, you will navigate through such challenges whereby some of the companies will opt to grow at a very faster pace. When we talk about an overall industry growing at 15%, does not mean every company grow at 15%. There are companies which will grow at 50%. There are companies like us who will opt to grow at a very consistent rate of around 20, 22%. So the companies which are growing at a very faster pace need to rethink on their strategy. And we see that overall, this industry has the potentiality to maintain a growth of anywhere close to 15%.
Okay, Mr. Gandhi, great to have you on the show. Thanks as always for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.